Good morning. We're live, guys. How are we doing, everybody? It is December the 18th, guys. We definitely made it to Tuesday, man. The action of Monday is behind us. The daily candle did close yesterday, looking kind of bearish, or excuse me, looking kind of bullish, but we will get into that as we do the price analysis today. As I'd like to start off with every morning, I hope you're all doing well. I hope Tuesday morning is finding you guys okay, and that your trading bags are looking good, and that your mentality is doing good, guys. Trading is as much psychological as it is statistical. So the key thing to just remember in markets such as these, where everybody is just, have you ever tried to get on a crowded subway? More so than that, have you ever been down to something like Central Park in New York, especially on days when people are doing soapboxing? It's kind of like, it's a miasma out there of chaos, and everybody has their predictions and their opinions, and just as regular humanity normally is, there's a lot of noise, and it's often very difficult to know what to wade through, what to respect, what to look for, and what to listen to. So this is why I always advise individuals, and this is probably one of the best trading tips that I ever received when I first started trading, is to make sure that you are generating your own unique trading ideas. If you have a unique trading idea that you generate, and you have risk management incorporated into that as part of your disciplined trading strategy, and you imply in your unique trade idea where you would like to enter, where you would like to cut your risk, and where you would like to take profit, it doesn't matter if that's not consensus opinion. In fact, it's probably better if it's not consensus opinion. The difficulty and the problem with taking a consensus trading opinion is this. When you have a whole lot of people stuck on one side of a trade, they will tend to react simultaneously in the same fashion. So if price begins to move down at a certain psychological point, most people will tend to exit the market simultaneously, which will put you in a worse position, because the price will move against you faster, closer or further past your desired stop or risk management stop loss, because everybody is acting at the same time. This is why I like to trade counter to the trend generally, and this is why I look at data metrics like Coin Farm Online, the bid-ask sum, longs to shorts ratios, etc., so that I can have more data at my disposal to be able to generate unique trade ideas of my own. And I highly recommend that you guys do as well. Once you begin to actually generate your own unique trade ideas, you will be that much further in developing your own strategy. The desire, it's kind of a three-step process, guys. Risk management is where you should always start. Risk management and portfolio allocation. Discipline with your strategy, just sticking to your strategy no matter what. And then the desire and the need to develop your own unique trade ideas. So this is why, one of the things that I do with the show is that I generally don't tell people to enter here or exit there. I like to help people be able to see the charts the way that I see them, and then I hope that you take that information and use that as just one tool in your toolkit to develop your own unique trading ideas as well, guys. So we'll just start off with looking at the daily chart. I have added a few lines, and I'd like to explain them as we move along. The only things that I have added actually is that I did delete this line right here at 1798, roughly around that $1,800 area. The reason that I deleted it as a line is this. I do not expect this to actually hold as support. In my experience, previous support gets swept if it is going to be retested, and we're well past the area where that would make likely sense. So just to explain what that means, it is very common to see a low get swept before price continues to move upwards. You see examples of it quite frequently. So here is a good example where you did actually put in a little bit of a low on a pullback from a high. And then price consolidated a higher region, and then price moved down, swept that low, that higher time frame low, to tap into liquidity to actually push stops out, because of course many people would have had stop losses set below that low. Let's zoom in on that so you guys can see a little bit more clearly what I'm talking about. Let's turn off that auto mode. And this is just one random example that I just pulled just from looking at the chart. But yes, you can see that you did reach a top, you put in a low, and those who would have been overly bullish and would have entered with a bullish bias in this consolidation period immediately following this volatile movement, naturally would have had stops placed around this area. And what do you see? You see a stop loss hunt. You see this low get swept down to actually touch on the trend line, the ascending trend line that I had drawn here. That's the 2015 logarithmic trend line. And that low got swept, everybody got pushed out of their long positions, and then price was able to move up. Now, when you see a situation like that occur, it is generally in the short term, meaning that Since now price has expanded over a year, so this actually occurred in 2016. So this is over 2.5 years now that we're looking at coming back and retesting this area. I'm not expecting that area to hold. And the exact same thing over here. You see the pullback from a high. You have a period of consolidation. Many people would have entered into a biased long position in this area, setting their stops down here. And what do you see? You see a sweep of that higher time frame low. You see a stop loss hunt, essentially, is what you now know it to be. Liquidity get tapped into because as people are exiting with their stop losses, they are market selling to individuals who had their limit orders set at lower areas. So what you're doing is providing savvy investors the actual liquidity that they need to enter into their larger margin long positions or buy orders, depending on whether you're talking about a futures platform or whether you're talking about spot trading on something like Coinbase, Bitstamp, whatever. So this is a common pattern that you want to be watching for. This is the peril of entering into consolidation, and my personal strategy is to use average true range to determine where to set my entry and where to set my stop loss. So one thing that I often like to do is I will enter, if I'm looking at a period of consolidation, I will often enter with a small position of the capital of my portfolio, of the small position of my equity that I would actually like to be in the trade. So say this is we're back in this period in time. Let's actually do bar replay. Okay, so say we're here at this point in time. We don't know really what's going to happen. I'm gonna pull up average true range. Okay, we'll pull up in the data window, and average true range at this point in time is $306. $306. Now, there's several ways to do this if you are entering into consolidation. So what I like to do is I like to use a multiplier of ATR. So ATR, I generally look for 2x. So if we pull up in the data window, we see that average true range, which is our indicator that is measuring volatility. On this current weekly candle, it is actually at $306. So I generally take $306 and I multiply it by 2. That's weird. 306 multiplied by 2. I'm not a math major. $612. Okay, obviously. So we're looking to actually enter in $612 lower than what actual spot price is. That's where I like to set my buy. Now, to get exposure to the market, just in case price does tear off on me, I often will enter with a very small position of my capital in the actual consolidation range, so maybe 5 to 10% of the total amount of contracts that I want to trade in this particular situation, or actual amount of Bitcoin that I want to purchase in this situation, regardless of what it is, coins, if you're looking at any altcoin, whether it's a position of stocks, doesn't matter. Now, cryptocurrency than traditional equities, so keep in mind that this is more applicable to something as volatile as cryptocurrency, and that typically moves with the same kind of market manipulation that you do see in Forex. Let's see. So current price at this point in time would have been $25.09. So subtracting 612 from 25.09, we get 18.97. So let's pull out a horizontal ray, and we want to place that at 18.97. Okay, so this is actually where we want to have the lion's share of our entry position right here at this green line at 18.97. And now where are we managing risk? We're actually managing risk at ATR times 3.5 is how I like to do that. So that'd be 306 times 3.5, which would give us 1,071. So we would actually be managing risk $1,071 lower than the current market position. So again, we talked about current market position being at 25.09. We subtract 1,071 from that, we get 14.38. So we're managing risk at 14.38. Okay, so we're now managing risk there. So we're actually looking to enter here. Okay, and we're actually looking to manage risk at this level. Now, let's see if it played out. I don't know. What do you guys think? Think that played out well? Again, I did not do this before the show. I just pulled a random example just to use, and it could not have played out. I would not have been surprised if my stop loss hit. I'd be having a little bit more of an embarrassing conversation right now. But just to show you guys the strategy that I have found to be very congruent with actually entering into periods of consolidation when you have posited in a local low and you are expecting that local low to get swept. This is a pattern to be watching for quite frequently. So you can actually see here. One of the things that as a trader, and again, I don't like to come on the show and like brag that I'm amazing. I have my good days and I have my bad days. I've just been doing this for a while, so I'm able to bring experience to the marketplace as well. That's why I'm able to do this successfully. So, one comment that I do get is that when I do take positions, I am able to. It's not that I'm able to figure out exactly where wicks are going to go. It's just that is my personal strategy for entering into consolidation. Okay, so that would have worked out well for you here. You did not get that spike up, that sweep of liquidity. You would have back here. So ATR at 2x would have actually been able to have you purchase here, managing risk right around here. That would have kept you in. However, once we entered into this phase of the market, we weren't going to get an up thrust. All right, so let me zoom this bad boy out a little bit because I did want to talk about the other. So that was my justification for deleting this line. I do not expect support. So actually, let me continue and finish that thought. So now that it has been almost 2.5 years since we did retest this low, I'm not expecting, or excuse me, this low, which formed at this low, I'm not expecting this to hold up in any significant way. You always look for resistance to become support. You don't look for support to act as support. Support when you have broken past a previous resistance on your way back down. So at one point you had resistance. When you trade above it, it becomes support. If that support breaks, you're not really expecting your lower level of support to hold, except in certain situations. Like say, for example, the support has only been tested once. You can look for a potential double bounce. In my experience, that doesn't hold up a lot. You can actually see, for example, right here, you did get a double bounce in Bitcoin, and look at how weak that second bounce was. And as I was saying back when we were trading here, guys, I've been doing these shows for a while, that the more times, and again, I put out a trading view chart for it as well, if you go look at my published ideas, support is like a springboard, and the more times that you bounce against it and test against it, the less likely it is to hold. So as we come back up into the marketplace, I am expecting that level around 5,800, 5,900, 6,000 to be acting as significant resistance. And that's why I say that it's very hard to be overly enthusiastic and optimistic about a new bull run until we're back above these levels or until we see clear signs of capitulation. Now, let's get into some of the other the other lines that I have added to this chart. All I added was this green rectangular box. I've had these lines on the chart for a while. So just for clarification purposes, what this upper line is, which is currently sitting at 29.38, it would be an initial level of support. And we do have a double test as resistance. We have a breakthrough and then a pullback to wick down and test that as new support. Okay, so this now is a significant area in my mind. It is also right at the top, looking at volume profile. It is also right at the top, right on the outer boundaries of the value area. So that is based on candlestick pattern and volume profile, a likely area for price to find support on. Now, whether it finds strong support there or weak support, we will have to wait and see the strength of the bounce and the amount of volume coming into that candle. The second area that I do have earmarked for support is a wider range, because there's not a significant area there to really go against. Like if we do break this, then perhaps we can look at 27.44, which would be the daily candle close of that region. I'm not really expecting that to significantly hold up as support. It doesn't seem, it's just another thing to look at, but it doesn't seem to me to be significantly important. So what we are left with just is this distribution order block, this previous accumulation order block, which is denoted now by the green rectangle. That is also the entire bound of the value area of this high volume node on volume profile. So if we do get rejection from our current price area right here, and I'll get into a new measured move for an upward target here in a second that I have now put out there, we are looking in this area. Now, do I think it's a sheer drop down? No. And why do I not think it's a sheer drop down? I think that it actually will be a slow slog down because it is a high volume node, meaning this is an area previously where people were overly interested in trading. And we do actually see that this took, once we came into this area, it took us from the 29th of May 2017 until the 31st of July. So almost 2 months until we were actually almost 3 months until we were able to break out of that area. So we would be looking for more of an extended period down, and that would actually put us in the end of Q1 or Q2 of 2019, which I've been talking about significantly for a while. I now have added 3 vertical lines to the dilation measurement. So we do actually see the peak here on December 17th, 2017. I actually do have this on the 11th based on the weekly candle. But this is the peak of our last bull market. And then we had this slow slog down until the actual break of the descending triangle. So that actually occurred on the 5th, the week of the 5th of November 2018, and then the following week we did break down. So I have measured that same period of time into the future just to get a rough estimate of a period in time that would be psychologically significant or based on the fractal of this pattern. And I don't trade fractals. This is just here to give us something to talk about and to give us something to base our measurements off of. And that's going to be the week of the 7th of October 2019. So that's actually going to be at the end of Q3 2019. So be looking for that particular area. Now, do I think that do I impart significance to this? Not really. I put it on the chart mostly as just an idea of fractal measurement and just an area to be looking at as significant compared on this. Now, the more significant area that I think, and I've read the analysis and charts on this, is actually the measurement of the growth of how long the bear markets last. So we do see an increase in the length of the bear markets. So I don't have that projection up on the chart. That would actually put us out later. But keep in mind, guys, that purchasing the year before a halving has, in Bitcoin's history, been statistically the best year to buy, putting 2019 as statistically the best year to buy, and looking at price relative to our all-time high, and looking at price at the percentage point down, which is around 85 to 90% is about the average the Bitcoin crashes before it does recover. Again, I think that this area is just an important area to be looking at as well. And it's hard to determine, again, guys, as a trader, long-term projections to me are kind of silly. The longest term projection I think for Bitcoin would be, obviously I'm extremely bullish on Bitcoin for the long term, otherwise I wouldn't be invested in it. Do I think we recover all-time highs at some point in time? Yes, absolutely. But we are in a bear market, which is probably new for many of you guys. For many of you guys who are newer to cryptocurrency, who only began trading in cryptocurrency in 2017, 2016, you haven't been through a bear market. And again, I only started trading cryptocurrency in 2016. I was in Forex before that. So have I experienced a Bitcoin bear market before as a trader? No, I have not. I was aware of it at the time, but I have experienced downturns in the stock market, having been trading since 2008. So this is not anything significantly new to me. I've been through the pain before. The other area that I have added is this green rectangle around 1350. So if we actually do look for where previous resistance would become support, we actually do see that exact same thing over here. Now, this is actually going to be weaker support because the support at 29.38, we do actually get a double test, a breakthrough, and then a pullback to test as support. Over here at 1350 is our next drop down area where we do actually put in resistance, we do pull back to test the logarithmic trend line, and then we do break through. But there wasn't a significant pullback to actually test this as support. We just continued carrying on right up away. So if we actually do break down below this value area that ends at 22.45 and actually do close below the 88.6 Fibonacci retracement at 23.31, more than likely that would be more of a straight shot down. Why? Because that's a low volume node. You can see how price shot up through that area like a hot knife through butter. Was not interested in hanging out in that area. And again, I've been saying this for a while, guys. When you shoot up through an area, as you come back down, you get what you deserve. And, Bitcoin obviously wanted just to push through this area like a hot knife through butter, and it's most likely going to come down through this area like a hot knife through butter. Now, there is this ascending trend line based off the wicks that I have measured out, and that intersects right around that time horizon that I had pointed out with that horizontal level of support and resistance. And again, the top of the... You see, that kind of startled me. Every time I get the first sub when I'm deep in my thoughts, I'm kind of like, ugh. Hey, All in the Mind 2006, man. Thank you so much for the sub on YouTube. Oh, speaking of which, I did want to give a quick shout out. So I did actually figure out how I could see my Twitch subscribers, and I did want to thank Mr. Hut QC and Bratwurst Inferno for the subscriptions on Twitch yesterday. Thank you so much. I highly appreciate that. Let me see if I can see my... just a second. Yeah, and Free Road 2010 and Solar Recap and Turbo 96 Stang and VB Streets. And thank you so much for the follows on Twitch. Thanks, guys. I do now have a way to see that. So whether or not I actually watch the OBS screen and miss it, I now have a way to see that. So I highly appreciate it, guys. Thanks for the support. So yes, so this green rectangle area has 3 levels of confluence now, actually 4. Horizontal support, horizontal resistance that I would expect to become support in the next time we come around. The top of the volume profile value area, the intersection of the ascending, the secondary ascending logarithmic trend line, and the time horizon that I had pushed out. So the time dilation fractal measurement from the extent of the top to the breakdown point, and from the breakdown point to the next area. Now, would this be more valid if I actually did an extension of time? Perhaps, and maybe as I'm going over the charts later in my private time, I'll have some time to do that. I do kind of want to review the data that I've seen from people doing measurements of the time extension of bear markets and projecting that statistical multiplier into the future. So perhaps I'll get kind of an interesting new horizontal line to look at here, or excuse me, vertical line as I do that as well, guys. So. Let's go take a look at candlesticks. We do still have the exact same thing, bullish engulfing candlestick on the weekly. So far, low weekly volume. Of course, it is only Tuesday, so only 3 days into the weekly candle. We will see. Obviously, we just have to wait and see how this weekly candle plays out. We have not traded above we have traded above the actual candle body open of our previous bearish candle. So it's hard to get overly excited about upwards momentum and movement on a longer term time basis until we close daily candles above this level, which I'll get into here in a second as we go down to the lower time frames, but also weekly candle closes above this close as well. Bobby, thanks for the sub on YouTube, man. All right, so let's go down into this bad boy as well. Now we'll turn off logarithmic because to me that's only valid for looking at the higher time frames when we're actually looking at the lower time frames. So it really, to me, the daily and lower logarithmic does not apply to me. I don't like looking at that. In fact, I don't like trading on the logarithmic scales or analyzing the chart significantly on the logarithmic scales. I feel it's only valid for looking at Bitcoin so that you can take in all of its historical data as well. Now, so we do have on the daily chart, let's take a gander here. All right, so we do have our previous resistance where the high of our previous daily candle close on the bounce up from this consolidation order block right here at 35.29. That was the actual daily candle close of this, actually, yes, 35.29 and 75 cents. I've measured that out. That is also the bottom of this wick right here. William Cowlitz, hey, thanks for the sub on YouTube, man. Okay, so until we actually close a daily candle above that area, it's hard to get excited. Again, we were talking about this yesterday. We did end up gapping up, as we saw on the stream, from 3,400 to 36, or into the mid 35 area range, the higher 3,500 area range. We're not able to actually hit that psychological number of 3,600. And again, yesterday during the stream, I had recommended caution. I said that even if this trade does play out, and if you are able to push up into 3,600, is not the good statistical trade to take. And regardless of whether that trade actualized, I don't find it good trading hygiene to take risky gambles when I don't see any data to really back up my confidence in that particular trade. Now, we're seeing the exact same thing today. I said yesterday, guys, you do not want to be FOMOing into a long position here. We are in an overwhelmingly bearish market, and this is a prime opportunity for this movement to get faded, and that is most likely what savvy traders are trying to do. Errol Suleiman. Hey, what's up, man? Thanks. Welcome to YouTube, brother. And I feel justified in that. And regardless of whether I had logged in today and saw that price was hanging out in this $3,600 region, well, I spoke about that ad nauseum yesterday as well. I don't really get excited about this particular movement until we actually close higher time frame candles above 3,600. We do have Rattle99. Hey, thanks for the sub on YouTube, bro. Welcome to the community. We do actually have a falling wedge pattern forming on the daily, 12-hour, 6-hour, 4-hour, on all the lower time frames as well. That does give us a measured move of 44.02, which would put us right above the 786 Fibonacci retracement. Now, am I overly excited about this? No, not particularly. I don't get excited about bullish chart patterns in a bearish market. I have had, if we go over to my XBT chart, again, I have had upwards price targets of 37, 32, 38, 65, and 40, 24 here for a while, as you can see here, indicated by the cheers sign, guys. So maybe potentially drinking beer up here at some point in time with you guys. I don't really drink too much, but it gets hard for me to become excited about that until I actually see confirmation of this breakout. Like right now, again, breakouts normally do not take on the first go through. They often get faded, as we're seeing right here. So whichever way you want to look at this, whether you want to look at this from a horizontal support and resistance lens like I like to, and you actually see that yes, we did trade above our 35.29 current area of resistance. We did actually trade into this previous resistance bearish order block, and it got faded as I expected that it would yesterday. Now, whether this, we'll just have to wait and see. We have a low volume day as opposed to yesterday, and we do have this bearish spinning top indecision doji, which at the top of a movement upwards typically resolves bearishly. If we do break back down into this falling wedge and break down, for me, significantly below 3,400, which would be a breakdown of the point of control around 3,400 to around 3375. So we do see the current point of control, the high volume node on the volume profile right here. That would also be a breakdown below our consolidation order block. So let's change some colors here. So just doing this the correct way, the proper way, is to assume that this would turn into support. And let's go down into the 12-hour chart so we can talk about this a little bit. Now, during yesterday's stream, when we were here, before we gapped up to retest 3,600, I had said that what I would like to see before I would be excited to enter into a long position based off this pump is I would like to see a pullback to test the upper area of the value area of this high volume node. And just so you understand what I mean by value area, if you can actually look at volume profile right here, you do see that it is denoted into high volume nodes and low volume nodes. So basically anything that is wide is going to be a high volume node. Anything that is short is going to be a low volume node. And the value area is 70% of the area of which is traded there. So we do actually see that high volume node, depending on how you want to measure it, actually ends anywhere from 3276 to potentially 3269. Now, if price had pulled back to test that area, which would have also been at that point in time, I would have to go look at those lower time frames to actually see where to measure the Fibonacci retracement from, would have been about a 50% or a 618 Fibonacci retracement back to that level. That would have been an area that I would have potentially taken along, also because I could have set good risk management, setting a stop loss below the point of control for most of my position, and then holding on to a little bit of my position until an actual breakdown of the value area around 3176. Now, I would actually be looking for the exact same thing here, which we actually did have if you were trading on the lower time frames. We did get rejected and faded from the bearish order block. We did pull back on this spinning top indecision doji candle on the 12-hour chart to actually test both the top of the value area and the point of control. So if you were looking for a good position, this would have been the area right here. Using volume profile and looking for a pullback, this would have been an extremely aggressive pullback. So just using Fibonacci, that was a pullback to the 382 Fibonacci extension, roughly, give or take a few Satoshis, give or take a few dollars, my bad. So used to looking at altcoin charts. But it was a pullback to the top of the value area and almost to the point of control as well. So we can see that right here. So the value area extends. This is the value area, the top of the value area right here. Price did pull back to test that area. And if you were watching this on the lower time frames, that is not a bad area to enter into a speculative long position. Again, you make sure I'm not overly excited about entering into a lot of scalp longs in this current market. I do enter into them. If you guys, for anybody who is a member of the Kraken Cryptocurrency Premium Trading Group, know ad nauseum. Now, the reason why I like trading like this is because of the risk management that allows me to apply. So where would you be managing risk in this particular trade? Well, you would probably be managing risk here, right below the point of control. You would also, for a lot of your position, and then you could also pick an area like this where the value area really dies off and you'd be entering into low volume node territory. So if you had looked to enter at a retest of this value area, so anywhere from 3430 to 3447 would have been a good entry point right here. And again, forget the candlesticks, just look at volume profile. You can trade just off volume profile. You could have been managing risk at 33.78 and 33.32. Now that you are in profit, I would definitely move your stop up to probably the low of this candlestick, I definitely would be chasing profits in the very short term for these particular positions, because in an overwhelmingly bear market, the bears can attack at any time, guys, and this could all turn around and slam back down in your face at any moment. Now, when do I become excited? I become excited if we get I would even say a 6 hour, but for me, a 12 hour or a daily candle close above 3,600. Really, for me to get overly excited, I'd like to see it above like 3,630. And then I would be looking at those upward targets, looking over here on the BitMEX chart at around 37.32, 38.65, and 40.24. That would also be roughly, that would be undershooting the measured move of the falling wedge. Excuse me. That upward target is 44.02 on spot price. But more than likely, I'm not getting over my skis until I actually see volume confirmation and candlestick confirmation, the breaks of these horizontal resistances, and then look for those to turn into supports. And again, a couple different ways that you can actually enter. The more aggressive way is to enter on the actual breakout, so actually on the 12 hour, the 6 hour, the daily candle close. The more conservative method that I would probably recommend is wait for the daily candle close and then wait for a pullback to retest these areas as support before entering into your long position. That's going to give you good confirmation and tighter risk management strategy as well. So yeah, nothing really has changed on XBT. Now, just to be transparent with my position, we did take profits on our long position yesterday at 3,500. I did post that update out to the members, and the main reason is that I just did not like this candlestick formation. Now, is this consolidation hanging around the bearish order block? Yes, but I'm just not confident on which way this movement is going to go. I'm more confident in potentially looking to re-enter into a short position. Have not re-entered into a short position yet at this time. I'm just not comfortable with a position at this particular time. So just to give you guys a recap on how we have played XBT in the short term, again, this chart has not changed. I have changed the BTC chart on Bitstamp, and I went over those changes with you just now, but I have not changed the chart on BitMEX. So I did get an initial fill at 3,500, 3,300, and I did get a partial fill at 3,200, although it was not a significant fill. We took profits at 3,550. We also took profits at 3,620, which was the measured move of the inverted head and shoulders that we saw playing out on the lower time frames. We did refill at 3,200 and 3,164. The reason for the fill at 3,164, it was the measured move of the head and shoulders that I saw playing out on the 1 hour and the 30-minute time frame. We were able to get a fill, so this was this point in time right here. We did take profits at 3,280. The way I got that price target was ATR times 1 from the value area here, and then price did come back and break out at our stop loss in profit. And then our next fill was at 3,200, 3,150, and which gave us an average entry of 3,175, and then we took profits yesterday on that trade at 3,500. So for XBT, the trading group is not in a position on XBT right now at this moment. We do have active positions in about 4 altcoins. We have 3 active positions in other BitMEX pairings as well, and we're just waiting patiently to enter into a period of XBT where I feel more confident. So either a breakout trade to the upside up here, but more potentially looking to also scalp short in these areas as well. So that's a lot. That's kind of complicated, but it's really not. I always like to provide individuals with multiple trade ideas and multiple trade setups, and they can take whichever they feel confident with. So yeah. Don't really have anything interesting here to talk about. Honestly, the reality of the situation is that we just need to be patient and wait for this consolidation to enter. Again, if you do want to be entering into a period of consolidation, as we see here on the lower time frames, we do see consolidation in this period. This does look. This recent swipe back up was not a sweep of the highs, which would make me very bearish. But the fact that we weren't able to get as high as them also is also bearish as well, if that makes sense to you guys. We were able to close hourly candles higher than our previous hourly candle closes, but we weren't actually able to sweep the highs or trade above the highs as well. So thank you, Windows 10. I'll make sure to never do that. So at this point in time, I am just going to patiently wait. I'm not going to be taking a short position from these levels. I would potentially be looking to enter into a short position on a close below 3,400. That would allow me to manage my risk above this value area, above the point of control and above the value area. And then look for these downward targets again of 3,272, potentially even lower if we break through this consolidation order block right here. and then I'd be looking to potentially take a short-term long trade setup on an actual higher time frame close. So again, 12-hour, 6-hour, 12-hour potentially above 3,600. For me, I'd be more excited about 36, 37. Then I began potentially looking at that measured move of the inverted head and shoulders. However, I do have short scalp setups throughout here as well. A return to the point of control type setup. VHC Arbito, thanks for the sub on YouTube, man. And Mike Stiller and Jaward Riaz. I missed you guys. Sorry about that. But thank you for the subs on YouTube, guys. Welcome to the community. Okay. So let's go take a look at chat, actually. Let's go take a look at chat. Oh, no, before we do chat, I got some announcements, guys. Let's do announcements. So the first thing, let's talk about the most important thing that you can do with your day-to-day. Guys, head on over to cryptocurrency.com. Really, I just like input on the website, honestly. Tell me what you guys think. Scott continues to work hard on this. 4AKIJS. Hey, thanks for the sub on YouTube, man. Head over to cryptocurrency.com. Scott continues to improve the website. It continues to get better as well, guys. If you want to support the show, guys, if you enjoy the stream, we are here live at every morning, 12 p.m. Board 11 a.m. Central Standard Time. Guys, do the calculations to get that, but you do get the notification button. But if you do like what you see, if you would like to support the stream, I would appreciate it if you feel the compulsion to gently nudge that like button. We would highly appreciate that, guys. And Yulu Watu77, thank you so much for the sub on YouTube. And make sure you guys hit that subscribe button and the notification bell so you can be notified, because again, we are here live every single morning. If you guys would like to support the stream, we are on Twitch, trying to build up the Twitch following. So we are on Twitch at twitch.tv/KrakenCrypto. You guys can head on over there and give us a follow. Doesn't cost you guys anything, helps support the stream. And if you guys have Amazon Prime, you guys can give us a sub. Doesn't cost you anything. We get a penance from it, and it helps keep the lights on. So thank you so much for that. Mohammed Mergici, thank you so much for the sub on YouTube. If you guys would like to support the stream in a more substantial way, you can check out our Patreon or pick up a t-shirt or a mug. We do have a lot of interesting products for you guys to get. Now, you do get something for this as well, guys. If you do drink, let me show you my preferred cup of choice. It is right here, the HODL Contrast mug. This is the one I drink my morning coffee out of. If you do drink your morning coffee out of the HODL Kraken Cryptocurrency mug, your coffee will taste 85% better, and you will be 95% more attractive to the opposite sex. Again, those statistics continue to rise, but the scientific data on this just continues to pour in, guys. If you guys would like to join the Kraken Cryptocurrency Premium Trading Group as well, you can check that out as well. If you guys are unsatisfied with your trading and you would like one-on-one mentorship, you would get access to the VIP Discord channel for chat in our Discord. You get access to everything behind the private paywall in Discord. You get access to all our trade setups and trade signals. You also get access to the VIP day trading voice chat. You get access to our resource library, which has several gigabytes of educational material and webinar series on there. You also get access to the private webinars with the Kraken Cryptocurrency analysts and traders every Friday at 8 p.m. Central Standard Time. You also get access to your own trade journal and our live tracking sheet as well, guys. And we're currently in the process of developing bots, signals, everything that you guys could possibly imagine. So that is $80 a month for the price of December. So this is our traditional pricing. For the month of December, it is $80 a month. So if you guys are interested in that, you can pay us with PayPal or cryptocurrency. You guys can hit us up on the Discord, or all the information is here as well. We'd love to see you guys in our community, and the trading group continues to grow. So for December the 25th, we are going to have a $50 giveaway in Bitcoin. We will be giving the $50 away in Bitcoin, and the contest is going to be this. It is going to be a December price prediction for Christmas. So what that means is we want a price prediction of what Bitcoin's price will be on the daily candle close on Christmas Eve. So December 24th, at the daily candle close, which is 6 p.m. Central Standard Time, or 0000 UTC. On the daily candle close, we want to know what you think the price will be. There's a couple ways to enter into this, which we will be spinning up later today. We're going to create a channel in the Discord called Christmas Price Prediction Contest. So you have until the daily candle close on the eve of Christmas Eve, December 23rd, to enter in your price prediction. Obviously, you were more likely to be more accurate if you have more data, so if you wait until the 23rd. So you have until the daily candle close on December 23rd to input your price predictions for what the price will be on the open of on December 25th's daily candle. We want to know what the price will be on December 25th, the candle open. Not what price it closes on at Christmas, what price it actually is as we shift from UTC time from Christmas Eve to Christmas. So whoever wins that will get $50 in Bitcoin payable to whatever address they want. If you guys want like Ethereum or whatever, I'll work with you. It's whatever. But just figured everybody would want Bitcoin for the Christmas holiday seasons. So 2 ways to enter. We are going to create a Discord channel. If you guys join our Discord, you guys can hop in there and give your price prediction there. Or alternatively, we also are going to do it through Twitter. So if you tweet us at cracking_crypto with the hashtag crackingcryptobitmas, BITMAS, and give us your price prediction there as well as a valid way to enter if you're not a member of the Discord. We'll keep you guys updated on that. We're going to get that pushed out today. We'll be tweeting about it, and I'll also be posting that in the Discord as well, guys. So just want to get you involved in that contest. Just want to give back a little bit to the community as well. Okay, now let's go over to the chat. I am starving today, man. Hey, Parker, what's going on, man? Yep, Litecoin just for you, my friend. Yep. LTC. We'll be looking at that first. Hey, Christian Debit. Good morning to Croatia. How you doing, man? Texas Blues. Sanjeev Dasgratra. Sanjeev. You know, I'm gonna stop pronouncing last names because I think I suck at it. Sanjeev, good morning to you, man. Ben Joseph, what's going on, man? Hayden, what's up, man? Let's go. Gabe Anderson, Mark VDB, is there going to be another drop, you think? I've just kind of given my ideas of what's going to happen here. Omega 180984, good afternoon from Germany. Guten Nacht, mein Freund. Let's see here. Brandon Murray asks, can I put a stop loss at 3,300 and have a good sleep? Yes, that is roughly, I would be placing my stop loss around that 33.36 level. 3,300 doesn't seem a bad position if you are actually biased to take this to the upside. Again, not in a position at this moment in time. SK says, hi, saw you pretty often recently. Just curious if you use Elliott waves as well when doing TA. Nope, not at all, sir. Joey Rocket Cryptos, hey, what's up, dude? Did you ever make that announcement yesterday? I just made it, my friend. MRX Media, hey, thanks for the sub on YouTube, man. Satoshi Nakafomo, what's going on, man? How's 4chan doing? Myron Gaines says, we're going lower, bros, get ready. Highly possible. Satoshi Nakafomo, my Lambo car wash opens today, so come wash those Lambo, guys. We're mooning, baby. Hell yeah, dude. Mr. Dopamine, what's going on, man? Robin DeJong, morning, it's evening. I feel you, man. William Cowlitz, thanks for your technical analysis. I really appreciate what you are doing for us. You are one of the few good content creators out there. Keep it up. Hey, thanks, man. I really appreciate that, man. Thank you so much for being part of the community. Rattle99, cool channel. Hey, thanks, man. Dropping now on the 1 minute and the 5 minute chart. Yeah, the problem with looking at the 1 minute and the 5 minute chart, though, my friend, is that you are going to be getting a 1 minute and a 5 minute reaction. The lowest time frame that I tend to trade on is the 30-minute chart, and that's when I'm actually day trading on BitMEX. All right, Joey. Whoa, knocked over my vape juice. Joey Rockets Crypto. Which volume profile do I use? So this is visible range right here. And when I do day trade on BitMEX, boom, let's take all that off. Really the only indicator that I use is session volume. And I go over this at length in the webinars with the premium subscribers about how I use session volume, how I trade for it. There are 3 types of trade setups that I look to take. Single prints or aggressive initiations, returns to point of controls, or violent rejection areas. I'll probably make, at some point, like after the subscribers have had maybe like a month to digest that, I might put out a webinar or like a public how to trade video on how to actually use the volume profile, session volume. There's lots of, it's not a state secret. It's just certain ways that I have learned to trade it and that I feel comfortable with. Victor Hugo says, guys, please help out and buy some PIVX, TNT, Wings, Yo-Yo, and CDT. My portfolio is 90% down from January, so these should triple by January and help me get a few hundred of my $2,000 investment back. You heard it here live, guys. If you want to go help out Mr. Victor Hugo, you know what to buy. Eddie Video Star, Mourinho has moved from Manchester United and egress under duress. Well, hey, what's going on, you soccer hooligan? Give me 1 sec, guys. Might have to go get some water. I am parched this morning, guys. Let's see. Back to the chat. Krypton mining, man. You come in here every day and you just yell China. Con! I drink morning beer out of my mug. Nice, dude. Texas Blues asks, hey Justin, I understand fibs, but wondering if you could please clarify exactly where to start measuring. Yeah, let me show you. So again, something like whenever you're dealing with stuff like chart patterns, or, in Fibonacci is kind of falling into that territory as well. It is a drawing tool. There's lots of controversy on where to measure from. So I'll just tell you how I tend to do it with Bitcoin. So I actually do measure from wick to wick. The other traditional way to do it is, so hold on, let me just start with the basics. We're going to have to throw all that nasty stuff on there actually. So let's pull up something like, this, Coinbase. Let's just get rid of this crap. Talk about Fibonacci's for a minute. So the traditional way that I like to use Fibonacci's is I like to look for confluence to strengthen the strength. God, that sounds stupid, man. Of the signal. So measuring from swing high to swing low will give you your traditional way to measure out for your Fibonacci's. And then another way that I like to do it is right before. So we have an up move right here. So we would actually take the recent low right here and we'd measure from there. Now, because we're measuring such a strong area, because we're measuring such a simple area, we're now looking for confluence. So the only area of strong confluence or overlapping that we actually see here is 3220, 3226, where we actually do have an intersection of the 786 Fibonacci retracement and the 886. That generally puts us like all the way down to the beginning. But that's one area to do it, especially if you're doing longer time frames. For this particular move, I would most likely just measure from the swing low to the swing high to give you your key areas of where you're wanting to pull back from. Some people do prefer to measure from actual candle body closes. So in that situation, you would get cancel. In that situation, you would actually be measuring from swing high to swing low based off candle body closes, and you would get that. So that looks a little cleaner to you right now, because you do see the price did wick down to the 236 Fibonacci retracement, which, I mean, the first standard rule is that after an up move and after you do reach in a local top, you do see here you have a tweezer top reversal pattern, so expecting to get a pullback from this area, and you did. A pullback to the 236 is often extremely aggressive, meaning that if you actually do find support off that 236, you are going to move upwards more aggressively rather than a pullback to the 50% retracement in the 618 is your common retrace zone. However, what I have found is that when you do pull back to the 236, you do get more aggressive initiation upwards, but it's often on less volume and often fails on the first go through until you actually do pull back to a sustainable retracement area from around the 50% to the 618 is your common retrace zone for the traditional way that you would apply Fibonacci. So let's find an example here where we can get more of a. So we measure from our swing high here to our swing low. and we can get likely price targets for where Bitcoin is going to go. Just if you were playing the bullish retracement pattern, these are areas where you can set take profits. Again, I always like to use a standard deviation, so I just use these as a general guideline. I don't trade purely based off Fibonacci's. They're just a secondary level of confluence to find when measuring out your movements, measuring out your take profits. Again, my personal strategy is to use areas like actual lows, actual wicks when I'm looking for take profit targets on the way up, because there was a lot of liquidity in that area, and it's more likely that price would actually reach those areas rather than if I actually aim for candle body consolidation periods where there's more volume, because you're likely to maybe not get there. So those are areas that I like to target as well. And we do see here like rough confluence. So in this case, you could set something like a zone for where you want to take profit. Something like that is a helpful way to do it. So here we have a measured move from our swing high to our swing low, so we can take our local high and measure to our local low. And then we'd be looking for confluence or overlap. So we get confluence and overlap here, where we actually do our 236 and our 618 Fibonacci retracement right here. And we also have confluence right here with our 50% retracement and our 1.236 extension. So now in my mind, these have become important areas, looking at, using Fibonacci strategy. And we actually did see that confluence there, where actually price did find a bottom there on the 236 and the Fibonacci, and the 618. So that is a good way to use Fibonacci, is to actually overlay a swing high to a swing low, and then a local high to a local low, or conversely a swing low to a swing high, local low to a local high, whatever, whether you're in a downtrend or an uptrend, and then look for overlap or confluence, and then realize to yourself that those are going to be more important key areas. And then you have to use your directional bias and risk management to determine, okay, based on that, where and how and when do I actually want to enter. I feel like an asshole because I did that before Litecoin. So let's go look at Litecoin, man. I promised you I'd look at Litecoin. Okay. So here's my Litecoin chart. Hasn't really changed a whole lot. Let's zoom this baby down a little bit. Let's actually adjust this a little bit now. So I'll explain what I'm doing. We'll talk off we'll begin with the explanation of what I have on the chart. So we have a previous bearish order block indicated by volume profile right here. Now I am measuring take profit targets on the way up by measuring wicks. These are areas where I do like to take profits. They also act as primary resistance levels. So we do see the exact thing here. So I'm going to delete that line, and I'm going to put in my new take profit target there. That's also going to act as your initial point of resistance. Now we do have a new, again, I haven't updated this in a few days, but we do have a new bearish order block right here. So we do have a low volume node in between the overcoming of this bearish order block and this bearish order block. We would be looking for, if we do get a daily candle close above this region, so for me that's roughly like $35.60, I would be fairly positive about taking a trade to the upside here on Litecoin, because more than likely we do move back up into this, we do move through this low volume node very quickly, just as we move down through it very quickly. Again, you get what you, as I've said ad nauseum, when price reaches low volume nodes, they act as train tracks. Price does not have a lot of interest in hanging around in the train track region. They just like to go right through them. And then when they do hit a period of high volume, this is an area where traders are interested in redistributing or reaccumulating. As we can see right here. So price broke down from support, and we traveled through a low volume node until we established a high volume node. This is an area where traders were interested in redistributing. So this is where individuals were taking profits on their sells or their shorts, and individuals were attempting to buy the dip, and it was redistribution, and price continues moving down. And then we have now posited in this level right here of consolidation. We did break down from it, forming a little bit of a J-hook pattern upwards. Not a sharp V-bound reaction, but more of a slower J-hook. Now, we did have that nice couple days of pumping on Litecoin right now, but now we are reaching into that high volume node, and price is not likely to continue doing that massive pump movement through. In fact, this is the area where I would look for Litecoin to get faded. It's very hard for me to get excited about Litecoin moving upwards higher because traditionally when we do reach low or high volume nodes, price moves slowly, and then you look you look to take those violent movements when price actually does have a confirmed breakout. So this actually looks like a potential area to fade the market for me. We do have this indecision spinning top doji on the daily chart, as we see with Bitcoin, as we see with really all the other major coins as well. Jaimir Smari Johnson, thank you so much for the sub on YouTube, man. Welcome. Let's see here. So we'll just see how this plays out. I would not like to take a position on Litecoin right now. This is an area where I would definitely be setting my stop, probably below this recent swing low, a little bit below this point of control as well, right at the beginning of, if we zoom in here. We do have this shallow area in the volume profile, so I'd like to be setting my stop right above that, because if price does pull back down and close below that area, more than likely it's going to be retesting and hanging out around these value areas a little bit. Now, where do I look for a potential entry in this area? Well, if you are bullish, you are, and this is kind of, again, some people are like, well, why are you entering right below your stop loss? Because that's the way I traded. I cut my losses, and then I look for a better reentry. But again, in this particular situation, you should not be entering here, in my opinion. You would not be entering in this area. The couple trades on the table are the breakout trade on a confirmed close above $36, above like $36. Yeah, $36. If you do get a confirmed like daily candle close, or really a daily candle, if you manage to work your way up here and you're trading around this area and you start trading above 36, do I think it breaks on the first pass through? No. More likely wait for a little bit of a pullback, and then you can feel more confident about taking a long position in. Again, also, just the same thing. A breakout, wait for the pullback, that's when you enter into your long position, and then you take it to the upside. Fabio I'm not going to do last names. Fabio, hey, welcome, man. Thanks for the sub. Names, because I'm not good at them. Maybe it's because I have such a simple one. I don't know. Maybe it's biased. But yeah, not an area. So, and every time I get a sub, I get distracted in my thoughts. Sorry, guys. This is an area where I would potentially be looking to actually short the market. If you are actually wanting to enter into a long position, you do have this area right here. So this would be on a daily candle basis right here, the top, and this top right here, which is the upper boundary of your value area. You could potentially be looking to enter into a long position there and setting your stop loss right underneath the value area right here. I don't really like that trade. I'd probably set my stop tighter like here. See, I don't like those levels of risk, but at the same time, like when you have a 12% loss, it doesn't matter. That's one thing that people have difficulty wrapping their heads around when it comes to risk management, is that they think that, okay, well, listen, man, that's 12% down. I'm not willing to stomach that trade. That's cool, dude. You just reduce your position size. 12%, so say you have a $5,000 portfolio, you should only be losing $150 in every trade. So if you're gonna be potentially losing 12% on this trade, or let's just say 13%. So you're going to be losing 13% on this trade. Well, 13% of what number is 150? You guys know how to do that? Take 100, divide 13, you get a number, times that by 150. Your position size should be $1,153. Okay, make sure to adjust that for leverage if you are on the Z18 contract or the H19 contract. So that's your 2-to-1 risk-to-reward ratio, targeting $32.60 63 cents, expecting that pullback. What does Fibonacci tell us about that movement? So that's going to put us right around the 50% to the 618 Fibonacci retracement, and your stop loss is actually going to be at your 88.6 Fibonacci retracement. You can make your stop loss tighter, like at the 786, but I've just used the confluence. Nice to get that confluence here from the Fibonacci extension tool, retracement tool in this particular situation. But I'm mainly just basing these values off the value area where price is likely to fall off and enter back into bearish territory if it does hit those levels. So again, it's very hard for me to be optimistic about a long in a bearish market. For me, like statistically, I'm just looking for areas to fade the market. So for me, I'd actually be looking for key areas like these points of control, these high volume node areas that act as strong resistance. So those are going to be areas like $33, $34, $32, potentially even right now, this $29 area. Those are areas where I am typically looking to fade from. And then using something like average true range to determine where my actual optimum entry is going to be. Cover band backstage. What's going on, man? Welcome to the show. So yeah, where do I get excited about a long position on this? Well, again, I get excited if we're able to close a daily candle above $36. Then I'm comfortable with taking that position up to $41, potentially even extending into the high volume node area of 43. Conversely, on the same point, you see this very shallow low volume node area. So if you are able to actually close above $44, $45 as well, then I become excited about upward targets like 47. Even a retest of the point of control at $55. But as it sits right now, it's very hard for me to be excited about this. I didn't see any real clear signs of capitulation yet. This gave you a lot of time to buy the bottom, and you traditionally do not see that when a market actually bottoms out. Just with the overall prevailing market structure, man, it seems to me more like a pump that is not going to have a lot of follow through. But time will tell. Again, just be patient, man, and don't be rushing into positions. The only position that I'd be looking to take in this is if you do want to take a speculative long. I gave that entry on the table. That's going to be entering around 27, maybe 25 bucks, cutting your risk at 23.50. And then potentially looking at these targets. Again, the 2-to-1 risk ratio did put you up here around $32, but I'd be more comfortable with looking at short-term targets like 30, 32, 34 even potentially. And then you can let a winner run, expecting this low volume node trade. And then if you do close above 36, you can actually just re-enter into your position and extend your capital and look to take that breakout trade up to $41, 43. But I'd be extremely hesitant right now, man. This actually, me as a trader, these are areas that I look to short from. We had a nice little pump, provide liquidity, clear outs from shorts for me, and let me re-enter into my position. But and even these higher areas are areas that I would like to enter into shorts from as well, like $33, $32, expecting the price does not actually overtake these points of controls, these higher volume nodes. Yuluwatu77 says, awesome channel. We run the crypto hub in Frankfurt. V Gates. Are you using any signals using off-chain data? Any cool correlations you would recommend? Yeah, I have a link to the resources that I use in my Discord channel. Some of the data that I like to use at are the BitAskSum or data.bitcoinity.org. Obviously, historical data on CoinMarketCap. Bitger.com. VCDepth.io, VCHealth.io, CoinFarm.online, Datamish, Enroid, Solium. I've linked those pretty extensively, and all the links are available in the Discord as well. Oh, we've got price predictions coming in, man. Say this in Dutch, please. Well, I don't know what it means, so probably not going to say that, my friend. Hey, thanks, Commander Podnuts. Glad to have you on the team, man. Mr. Robot asks, what settings do I use for volume profile? Wild left price still appears. The width of the box is completely up to you guys. I do use row size 100, number of rows, and 70% for the value area. I've adjusted the colors just so they're easier on my eyes. I do have point of control and developing value area disabled, although I have in the past explained and streamed with using them. So if we actually take a look at how that would work, let's turn on developing value area. Developing value area for me is going to be more, let's hide the drawing tools. Developing value area for me is going to be more of an accurate Bollinger Bands, because the value area is just telling you where your strong support and resistance are, because they are measuring the actual 70% boundaries of. So the volume profile, so the area that's within the blue lines right now, the developing value area, the value area is where 70% of all the volume is being traded. And so the areas outside of the value area are going to be outliers, so you're not looking to really give those much attention or respect. You're mostly concerning yourself with the volume by price that is taking place within the value area. So the most basic way to use this is simply to use Gianfranco and Mike. Hey man, welcome to the stream, guys. The simplest way to take advantage of this is just to use developing value area as support and resistance. Another function that you can use that I actually find more helpful is the developing point of control for me. The developing point of control is tracking along in time the areas where the most heavily amount of traded volume was. And so I use these areas as key areas for targets for long positions or great entries for shorts as well, guys. So we do see that price, generally the theme is that price likes to return to the point of control. So you can actually see here, price either likes to return to the point of control or the point of control likes to come down and meet price. So we are actually developing a new point of control right here. And the nice thing about this is that if you do zoom in and zoom out, it will change depending on how much data that you have. So in this particular situation, we do actually see that our point of control on looking at more data is actually around 57, 58 bucks. So if we are able to get over this this $33 area, this big distribution order block that I had pointed out here in Litecoin, then you kind of get positive, although you do have a little bit of a high volume node right here as well. So I kind of showed you in the not in the lower time frames, but on the daily chart how I would play Litecoin out. But if you want to take, again, it just depends on what your time frame is and your risk tolerance and how overwhelming optimistically bullish you want to be. I would not be really looking at this data set. I'd be more concerning myself with this data set. The reason why is because I don't see any indications that we have shifted out of bearish territory. And so once you start incorporating this data, to me, that's more like, okay, we're on the backside up now, since we're going bullish now, like how are we going to test these areas, in what way and what function? So, Jaward Riaz asks, can you let us know what volume indicators you use? I can't find it, the one on the right. To find it, you need to have, I think something went wrong with my chat, but I didn't like drop my data. What the heck? Okay. Seems like I'm still here. That was weird. Thought I lost everything. Let's see here. Yeah, so for volume profile, that was funny. For volume profile, you can find it. You have to have a TradingView Pro account, so you can just sign up for the free 30-day trial and use that. You can also do the face mask, just keep signing up with different emails, like whatever. Not knocking on you. But once you have that TradingView Pro account, just go into indicators. It's going to be under volume profile. So visible range, session volume, fixed range. All three are great tools, but visible range always hangs out on the right side of my screen. I do a lot of trading based off of it. And then when I'm actually looking to identify key entries and exits, I tend to use session volume, and that's pretty much the only indicator that I use for day trading. Golden. I remember Golden. I remember trading this back in the day during the altcoin season run. Yeah, I'll look at NLG for you, J Constant. Oh, shoot. Let me change that real quick. Sorry, guys. Just responding to a couple DMs on Discord. There we go. And roll. And boom. There you go. All right, let's see here. So I'll look at NLG when I come back from the break. What is my prediction on Bitcoin price end of year? I don't do that, my friend. Tone Vase said to buy the dip. Ah, you listen to Tone, man. That was the first problem, bro. What side am I on? TradingView. This is CoinMarketCap right now. Satoshi is an Asian corporate conglomerate. Samsung, Toshiba, Nakamichi, Motorola. Could be, I guess. Newton, good morning, T-Man. Am I a long-term or a short-term trader? Short-term. I mean, but it depends on the market style, man. Like when I get clear signs of capitulation or clear signs of a trend reversal, I will become a long-term trader and establish long-term long positions in Bitcoin. Right now, I feel much more comfortable being out of the position after having... Again, I was in long-term short positions, guys. And then it wasn't until we actually, and you guys watch the stream every day, you guys know, it wasn't until we actually broke down from 3,600 that I began to be excited about taking a speculative long. And it's the way I've played it. It worked out quite well. Greg Kiosh, let me respond to your question there just because I was talking about stop losses. So no, so let me clarify. If you have a $5,000 portfolio, I don't like to risk more than 2 to 3% of my trade, of my portfolio per trade. So that means 3% of 5,000 is 150, okay? So what that means is that if I have a 12% potential loss on a trade, okay, I need to figure out 12% of what number is 150 because 150 is my predetermined risk that I'm allowed for this trade. So based off that, based on my risk, I can determine the position size that I need to invest in this trade. Hopefully that clarifies that. Just noticed I'm trading from a spaceship. Yes. Yes, I am joining you from. I am joining you from right out in the space, man. So hopefully I didn't lose my chat, man. If I lost a lot of chat, I'm actually going to refresh the restream chat page. Hopefully that doesn't kill everything. So yeah, guys, it's 12:14. You know what time that means. I'm going to take a quick break. When I get back, I will look at requests. So if you guys have any altcoins or anything you'd like me to take a look at. Ali Kaba and HB Cruising. Hey, thanks for the subs on YouTube, man. Sorry I forgot about you. Sorry I missed you there, HB Cruising. So if you guys have anything you'd like me to look at, I will go ahead and gladly do that for you. But I will take a quick 1 to 2 minute break, and then I'll be right back, guys. So get your requests ready, and when we get back, we'll continue crushing the markets together, guys. Hey guys, and we're back. Thanks for sticking with us, man. Let me go over to the chat. Something's wrong with my restream. Might have to actually pull open this. Actually scroll up to the, gotta actually pop out the regular chat because the display for restream chat for me is apparently having an issue.
It's over 9,000.
Hey DJ Spend 1025, thanks man. Do I think Bitcoin is on the downtrend right now? Should we wait to buy in? Yes. Yeah, I mean, obviously we have not exited the bear market, man. We don't have any signs that we are actually reversing. The most that I'm really expecting at this point in time, the reason that I kind of got excited to take my position when we did actually break down from 3,600 is that strong psychological support area around 3,000. I mean, so many things pointed to that. For me, most specifically, it was the bid-ask sum, the number of large bids that were coming on to the exchanges, on major exchanges. centered around that $3,000 level. And they did not actually pull their bids. They allowed them to get chewed into a little bit. Now, that's significant spot price confidence in the $3,000 level as support. So is it a likely area for a nice recovery bounce? Yes. Are we seeing that? Yes. But I'm not overly optimistic to get over my skis again. I'm very transparent with the positions that I take in XBT. And I did say earlier that I took profits yesterday at 3,500. I kind of saw this hanging out, doing its thing. I'm seeing it doing its thing right now. Does not overly impress me. Again, now I've reverted to my original situation to wait for a more significant pullback, which again did happen. You did come back to test the upper bound of this value area around this $3,400 area. Did not come back as much as I would have liked it, but you did come down here. And if you had been targeting the actual upper bound of that value area around 3,450, you would have had a nice entry position right there. Now, whether or not that should have turned into a short scalp for you, or whether that's actually going to be a good entry for a long-term position, all depends on patience. Like, I have to wait and see for a higher time frame close above $3,600. Above $3,600, I begin to look for opportunities to enter into the market. Let's see here.
It's over 9,000.
Hey, Reaper. Thanks for the sub on YouTube, man. Bull trap set up on altcoins by BTC. Yes, I do kind of agree with you on that. I'm very speculative about altcoin positions. There are some good coins that didn't pump yet that I'm waiting for kind of the volume to trickle down to. Those are the positions that I'm looking to take. Again, I'm only scalping altcoins right now. I have no long-term positions set up in any altcoins. Cigar Jiri, what would be the entry in BTC in the current scenario? The breakout above 3,600, or potentially to see a better pullback to 3,400. But then again, since we've already had that initial pullback, do we sweep this low? It's potential. It's potential we sweep this low and do come back to this $3,400 range. You can look at the 50% Fibonacci retracement here, but again, that 50% Fibonacci retracement is putting you below the point of control, and so I begin to become very hesitant about that. Right now, the areas that I would be speculatively targeting for an entry, if you are bound and determined to take a long position on BTC, is a pullback here to this previous point of control at 3,390, 3,400, managing risk probably around 3,330, 3,325, which would be the end of the value area. You could even be a little bit more aggressive and set it a little bit lower, maybe 3,320. The other area that you could look to enter is the top or the midpoint of this value area right here, this high volume node that we broke out of for consolidation, which we have not pulled back to test as support. We just continued gapping right up. So a more sustained exhaustion and a movement down here to 33. So the top of the value area would actually be at 3273. The point of control would be around 3230. So 3270, 3271, 3273, and 3230, and then managing. But then again, that becomes more tricky because it's hard to manage risk, because there your value area doesn't diminish until 3126. Now that's okay. It just means you have to use less capital because your stop is going to be farther away from you. So just make sure that you're using a risk management strategy to allocate the percentage of your portfolio that you're willing to risk on any trade. But I don't feel overly confident in these things right now. If this does break down, I'd actually be more looking for a short. Now, I'm actually not looking for a short. I'm actually not looking for a short until a wick above 3,600. I'd like to fade that, and I would exit my position if we do close above 3,600. Either I close in slight loss, not a big deal to me, or I actually just close out in slight profit or break even, and then I probably switch to a long if we actually do get a higher time frame close above 3,600. So expecting the initial pass through to get faded, and then potentially looking for the second breakout as well. But I'm just more comfortable sitting on the sidelines for now, guys. To get hit and seeing what price does around those areas, guys. Just react, not predict. I predict areas where I think price is likely to do things, if this then that, but I don't react until it actually hits those levels and does what I want to see. XRP Crypto Gamer says Mt. Gox Bitcoin getting released beginning of the year. I bet a lot will dump it, potentially, yes. Satoshi.
Over 9,000.
Mohammed Irfan and Jabba TV. Hey, thanks for the subs on YouTube, man. I don't smoke pot, dude. I don't do coke either, my friend. No, I don't do drugs, man. Sammy Bushido. I don't know who that dude is. And 20,000 XRP could be life-changing in a few years. It could, yeah. 20,000 Bitcoin could be life-changing in a few years. Probably be life-changing in a few hours if you got that amount of capital. All right, so I said I'd look at NLG. Mr. Golden. Yeah, I just have to look at it on Mr. Bitrix.
It's over 9,000!
XMAT JZ, hey, thanks for the sub on YouTube, man. Man. All right, let's see here. Upward price targets are going to be here. This is looking rough. Don't really want to consider that area. In that area right there too. So price did generally respect your entry area right here. So if we look at volume profile, if you look at volume profile, you did have your high volume node right in this area. Right there. And that was your good entry position for this short-term trade as well. Obviously, we're dealing with altcoins, so we're using small position sizes because that box did give you pretty much an 80% entry position. And if you would have entered anywhere in this area, let's just take the mid-range here. So assume you had bought here, which were previous highs, which is where you'd be targeting for areas of support. And we do see I drew out 3 of them right here based on areas that, another confluence you can look at when looking for what resistances are going to become supports. You can see here, just look for the amount of respect that they received. So we see respect here once, twice, 3 times, 4 times, 5 times, 6 times. So this is a valid support line. It's an area where a lot of traders were interested in. They were interested around in centering themselves around this area. So when price did break to the upside, let's just move that up a little bit, sorry. When price did actually break to the upside, they faded it. When price did break above it for the second go through, so this is what I'm talking about. Resistance doesn't often break on the first go through round. It breaks, you get the pullback, and then you're able to go. So you never really want to enter the first time on a breakout, or if you do with a very small position of your capital, and you can either cut losses extremely quickly and just know that, hey, I made a mistake, I entered into a faded breakout. You wait for a good pullback, which in this particular situation would have been the 618 Fibonacci retracement. And then price did actually move above, and the second confirmed breakout, you could have either entered on, like for this particular situation, you could have bought on the second breakout, Actually the second breakout would have been here. You got faded again. Then price did pull back to the 618 Fibonacci retracement right there, measuring from the local high to the local low. Pulled back to the 618, in between the 618 and the 786 Fibonacci retracement. And then price actually did make it on the third breakout right here. The first actual close above that area on the daily chart. And then you could have either bought in here on the breakout. Again, you could have done that here, stopped out, here stopped out, here stopped out, here stopped out, here stopped out. And sometimes trading's like that, man, when you're looking to trade a breakout, because you only need that one winner. Let's say you're losing like 1 or 2% on each one of these trades, and then you finally do make 30, 40, 50% here. It makes up for it, man. Especially if you're using the correct amount of capital and you have some consistent risk management discipline strategy here. The other way that you could have bought this is measuring from the swing high to the swing low here. You could have waited for you see this was a 50% Fibonacci pullback, so in between that 50% and the 618, just targeting these rough regions. I always like to give zones of standard deviations around the 618 Fibonacci retracement. You buy the pullback after the initial breakout. So this would have been the safer buy right here for me. The pullback to actually test this as resistance, or excuse me, to test this as support. Didn't quite come back down all the way, but again, zones of interest, not actual hard physical lines. And then you actually do get, man, if you could have caught those daily wicks, highly unlikely that anybody actually caught those daily wicks, but you could have had a good trade, obviously. All right, so price did come down and respect these areas. We are able to fashion a buy box because of that, also based on the volume profile here on the daily chart. As you can see here, we do have this high volume node right here that I've just measured, and also the boundaries of these previous resistances that we now expect to become support. Price did pull back in that area. Price has now moved up in a significant fashion from there, so you do have a nice, good, almost 80% profits on your hands. How high do I see altcoins going in markets like these? Not tremendously. We actually do see kind of the volume characteristics and the chart pattern of somewhat like a bull flag, or excuse me, a bear flag right here on the daily chart, where we do have falling volume, as you can see here. Just looking at volume by price. Taking the line of best fit, you do see falling volume right here as price continues to move up. Just filling out this bear flag a little bit. If this does break to the downside, then we would have a measured move of the breakout down here. So the top of the flagpole right there, that's 75% to the downside. So that would be a measured move of the break of the bear flag. I guess that's the more aggressive position, I guess. Just measuring from the swing low to the swing high. There's different places that you could actually measure this flagpole from. This would be the most significant pull down. So this would actually only be 50%, measuring from a breakout point of 50%. Would put you right back in your value area, right below into that low volume node area. The problem with that is that most likely what happens after that is that you do pull back up and test the bottom area of the value area as support. Now, if I was playing this, if I had bought in this value area right here, I would just be moving my stop up and make sure that I'm locking in profit. Again, this is a highly volatile altcoin, so you should have a small position in this anyways. But a safe place to be putting your stop loss now would be, here at 576 Satoshis. That'll keep you from getting wicked out. Let's take a look at ATR. So ATR 3.5 actually has your trailed stop. Down here at 531. So that's actually canceling you out of some profits. I would be more conservative with my target, locking in about 9% more profits right there on NLG. Is this an area where I would want to buy now? No, unfortunately not. You have not made it over. Let's look at volume profile here. price is currently at an area where we did have a swing low and found support. That did break down, so we're looking for this to become resistance. We were able to break above it on the first pass through, and then price immediately pulled back, and now we're struggling to get over this. On the daily chart, we do have an indecision, long-legged doji actually on the daily chart at the bottom of a bear flag formation. I would actually expect this to most likely break to the downside. You do have a little bit of a potential that this could flesh out a little bit more, that volume could continue to fall off here. You might be able to make a heroic push up to 823, which would be another 22% above you. However, if you were looking to take any kind of trade like that, I would probably see if that's actually worth it. It's almost worth it. It's almost worth it. So ATR 2.5 away from you is managing your risk at 585. You could expect for the good old college try of a push up there to 823, 825. Excuse me, 825. I'd give you a risk to reward ratio of about 1.9 is the only trade that I see on the table. So if you are bound and determined to take a long position in NLG, that's really the only thing that I see on the table. But honestly, with this bear flag formation, with the falling volume, with the overall bearish market right now, this is definitely a nice area where I would look to short. You do have this resistance area coming in right here. Not very significant, not a whole lot to look at on the volume profile, honestly. You don't get really anything significant on the volume profile as far as your most significant bearish order block until you get up here into the 1100 Satoshi area. But just hard for me to be really overly optimistic about altcoins right now, man. So if I look through this with a bearish lens, you'll just have to forgive me, man. You'll just have to forgive me. But I see what I see. And it's just much more profitable for me to scalp something with more liquidity like XBT right now, where I don't have to worry about price vacillating, 20% unless I want it to with leverage in a day. And again, altcoins are fine, just small positions, guys, small positions. Kevin A, I did a big analysis of Litecoin at the beginning, pretty much in the man. Let's see here. Getting back to the chat. John Loro asks, could I please explain wash trading? Do I know that Binance CEO is the king of allowing wash trading on crypto coins? So wash trading is a process where you are buying or selling a security or a coin or anything just for the purpose of generally what wash trading is historically, I guess, with securities, is wash trading is where you have a lot of buying or selling of a security just so you can like feed, I don't know, the marketplace misleading information. So say you're trying to sell somebody on buying a stock. So you've been doing, high frequency trading did this a lot. So you have your bots, your high frequency trading bots, like just pointed at a particular asset, and you have a certain amount of throwaway capital that you're able to just, trade back and forth basically between yourselves. Sometimes this happens between a broker and a broker and a dealer. Or broker and a trader. There's collusion with wash trading on certain exchanges, even in traditional markets with securities. But basically, it's just to mislead investors, because all this fake trading basically is supposed to represent the active interests of traders, and all it is it's actually representing the manipulations by a small company or a small group or a collusion between the broker and trader or a trader. So one of the reasons for wash trading on cryptocurrency exchanges is to, I guess the justification for, oh man, my voice is dying. So wash trading is illegal, but in the United States, obviously there's no regulation on wash trading with cryptocurrencies, but I would assume it would fall under the same laws. But regulation is so unconvincing so far in cryptocurrency that we still got a few years before everything really gets nailed down. But the reason that there's a lot of wash trading on cryptocurrency exchanges, the reason that I can understand it for happening, is that you want traders to be interested in trading a particular coin. And if there's not a lot of volume, if there's not a lot of individuals actively interested in trading it, then what CZ has done is initiate wash trading. Bitfinex has done it too. I guarantee you there's probably not a single cryptocurrency exchange out there that hasn't done wash trading, either directly through high-frequency trading bots or indirectly through collusion with a trader or a group of traders. Again, whenever you see like a new coin get listed on an exchange, generally the only way that coin's ever going to take off and get people excited to trade in it, because as a trader, when I'm looking for what I want to day trade today, I look at volume. That's how you did it. That's how you do it with traditional equities. That's how you do it with Forex. You go where the volatility is, and there's more volatility with more volume. So yeah, wash trading is unfortunate, but you know, it's not. It's obviously illegal, but I can understand where and why and how certain exchanges have done that to increase interest in actually trading crypto coins that just did not have the liquidity beforehand. And wash trading does also provide liquidity. Now it's a bad thing. It's a negative thing. It is what it is, but it is what it is. You know, it's just an aspect of the market. Now, CZ was kind of, in my opinion, like pretty blatant in the fact that they were like, yeah, whatever, you know, it happened. But supposedly they cut that off like in the middle of last year, but have they cut it off? Probably not. So yes, a lot of the volume that you see on a lot of altcoins, you know, and cryptocurrencies are probably going to be, you can't say it in all cases, but of course there's going to be a lot of bot trading, and there is going to be some wash trading. You just can't get away from that, man. It's just an aspect of the market until we get better exchanges and more regulation. Just the reality, man. Any thoughts on Hedra Hashcraft, aka HBAR? They have their own protocol called the Gossip Protocol. I don't know anything about it, my friend, although I'm going to have to agree with Ian Newton here and say that I probably like X42 better. Zubakio asks, can I check NAS? Yeah, sure, man. Jade Swanson says, hi, I'm new here. Hey, welcome, Jade Swanson. Thanks for joining the show. Do you think we bottomed out, or do we still need to go lower? Yes, in the long term, I do not think. In fact, I'm pretty confident that this is not the bottom for Bitcoin. Now, do we get a relief rally here to 4,000, 4,400? That's potential, but I do definitely think that we do end up going much lower than the levels that we've put in. Again, the market is not this generous to give you multiple times to buy the bottom. The market's not that generous. Thoughts on Monero? I don't know. Overall, I don't think it's a, for cryptocurrencies, it's a good project. I think there is a lot of validity to it. There are a lot of purposes for it, but it's tough. Sometimes I have to wear multiple hats between being a Bitcoin maximalist and being a trader. So yeah, but I assume you're probably wanting some charting done on it. So I'll look at NAS and XMR, and then I'm probably going to end the show for the day, guys. So let's look at NAS. Nebulous. Man. See, I just don't understand. Bro, you're better than this, man. You don't got to be trading something like this, bro. But okay. All right, man. So let me explain what I just did there. The first thing, obviously, that I did is I used swing lows and the lows of actual wicks to calculate take profit targets on the way back up, because those are pockets of liquidity or pools of liquidity, so likely areas for price to actually be able to hit before we hit higher volume areas of resistance like candle body closes or periods of consolidation. The next thing that I did was use volume profile to identify bearish order blocks that are likely areas for price to have difficulty making it over. So those are going to be acting as key levels of resistance. And so let me just preface this with saying that this does not look like a trade that I want to be anywhere near. Honestly, bro, you can do better than this, man. No reason to be. Again, if you provide me with some kind of news or content, but just in the charts, I don't see anything that tells me anything to be excited about. You just continue making lower lows after lower lows after lower lows after lower lows. I don't see any massive volume spike in here to tell me that capitulation has been reached for this particular asset. Normally, what you would want to see is just a big, huge, massive spike and a huge drop down on like one candle that would tell you the bottom is in for this particular coin. It is moving up. A couple days of upside just because Bitcoin's moved up. But overall, the trend on this is overwhelmingly bearish, man. I don't see anything right here to indicate that this is something that I would want to enter. But you do have a local low here. You do have a swing low here. So if you did want to enter based off that, I've used ATR and the multipliers of ATR that I use to calculate risk. So you do have an entry position in between 1535 and 1413. That is going to be roughly a 10% window, a 9% window. You are managing risk at 1263, which an average entry is going to put you about 13% to the downside. So let's see here. So is that worth it based on your first take profit target here? That's about a 1-to-1 risk to reward ratio. Not really quite worth it. Your second take profit target does put you close to that 2 risk to reward ratio as well. But I don't see anything that would really make me want to buy into this, man. Like I don't really see anything. I would actually prefer to take a trade like. I would actually prefer to take something like a breakout trade above 1947, because there we do have this LVN, and then potentially taking that trade up to something like these levels right here for a short-term play on this. Because that would be a gap trade through the LVN and then hitting targets before you actually reach your HVN of consolidation, or excuse me, a previous distribution, so this bearish order block. But yeah, there's the idea. Not anything that I would want to take whatsoever. You do have upward price targets of 1750 and 1947. So best of luck, man. Mista Mass says, how much importance to attribute to wicks as support resistance, or do you stick to candle bodies mostly? So I use wicks of so if I'm below price, so price right is right here, I'm using these wicks of swing lows as take profit targets on the way back up, because they're pockets of liquidity, and in bullish movement I would expect those areas to get hit. Conversely, when I'm looking for support, I'm actually looking to use the wicks when price is moving down. Then I start to look at more serious support and resistance as candle body closes. But for me, candle body closes in multiple succession, forming consolidation periods indicated by high volume nodes on the volume profile. So this gives me a bearish order block. This is a zone of resistance, zone of resistance, zone of resistance. The red lines are likely take profit targets where if you like set a limit order there, it'd likely be filled. And then, so yeah, I actually do put more support on the wicks than I do on candle body closes. But it's different as well. Like when I'm looking for actual breakouts, I need to see closes above candle bodies. Like, so for example, like if we go to the Bitcoin chart, and unhide drawing tools. You can see here that the daily candle body close of our recent high, of our swing high, is actually at 35.29, and I do need to see a candle body close above that. Right now, this is just looking like rejection for me. Now, I'm not overly rushing in to short this area right now. There's lots of opportunities to get into a short if we do start breaking these downside supports. I'm just waiting. Bitcoin right now, guys, I'm not in a position. I took profits on the long from 31.75 at 3,500 yesterday, and I'm just going to patiently wait, man. Patiently wait, bro.
It's over 9,000!
Ganton Polly, hey, and Renzor, hey, thanks for the subs on YouTube, guys. Hey, BCH ABC pumping a bit. Now you're coming up to that breakout entry or that take profit level as well. So yeah, having a nice little bit of a pumping day here. Let's go to the hourly chart and see when this all occurred. Oh yeah, so you did have a nice big ass pump on BCH ABC. That was a little oversold, man. That's an old one. Let's get rid of that one. Hayden says, looks like a transfer of wealth with the potential downside of BTC incoming soon, sometime soon. Yeah. So Texas Blues, if you're still watching, man, see how I got confluence here between the 382 and the 618. I got confluence here in the 618 and the 236, the 236 and the 786, the 618 and the 236, and down here the 50% and the 786, and then also our extensions down here as well. So just Fibonacci, good areas to look for. That's a lot of liquidity, man. That's kind of a market I want to be day trading right now. I might switch over to, I might hop on Binance after the show and do some day trading on BCH ABC. But probably not on Binance. Probably just going to switch on to probably start trading the Bcash futures now, because they just launched. Man, I'm getting hot, dude. Man, a lot of distribution right there, man. Well, shit. Here, and here, and here, and here, and there, and there, and there, and there. See, I see fucking 4 potential trades right there, man. And obviously here. Boom. That looks like a good short down to 0.272, 265. Or alternatively long entries, depending on which way your directional bias is. If you want to catch a knife, I prefer to short those. Man, look at that. That's a great trade, dude. These are great trades. I love high liquidity. Let me go check out BCH H19. I'll probably start trading on that contract. VPA, huh? Hashtag waves. BNB and Salt. Hey guys, it's 12:59. That means it's time for me to get offline. I'm here every morning at. Hey, only Spartak Moskva. And Ganton, I think I already said your name, but only Spartak Moskva. Hey, thanks for the sub on YouTube, guys. I'm here every morning at 12 p.m. Eastern time. So if you guys come in here and get in early, and I will take your request, be more than happy to look at BNB and Salt for you guys. So let's finish off with just giving it, where I think Bitcoin's likely to go. Again, I'm out of position on Bitcoin right now. This is starting to look a little bit more bearish as we put in these big wicks here at the top. This does look like rejection. Obviously, we have not gotten this V bottom down as we thought that we would. I'm not excited about a long position until we are able to close a daily candle above 35.29, and really I need to be more conservative and actually see a daily candle close above this resistance order block as well. I start to get bearish, looking for potential re-entries maybe around that $3,400 area, managing risk around 3,300. And then also you could also take another stab at it around 32.70 and managing risk a little bit below that. But I get less confident with the trade in that position. This is statistically the best area to potentially be looking for a short, but I'm not doing that at this current moment in time. I'm just going to sit on the sidelines and wait for Bitcoin to make a move in a direction. You know, I've been trading Bitcoin so much that I don't feel the need to be in a position right at this moment. We are in the shallow area of the volume profile, and there's just a lot of factors that are confusing at this point in time. So looking to take a breakout trade above 3,600, looking to potentially maybe speculatively enter into a retrace long at 3,400. But we've already had a retest of that area, so if it does break down, more than likely it wouldn't be a secondary sweep. It would actually be a confirmed breakdown. So I need to see a candle open and close below 3,400 though to see that as well, guys. So frustrating thing about trading is that it requires patience, man. So I've been able to capture good positions on XBT. I've got about 10 active open trades on other positions right now, so I will manage them and make sure that they play out well for me and the members of the Kraken Cryptocurrency Trading Group, and we'll just move forward with that, guys. So thank you guys for joining me so much today. Let's talk about the most important thing you can do with your day, guys. Head on over to krakencryptocurrency.com. Scott continues to improve the website. Let us know what you guys think. Give us your thoughts. The link to the Discord, the link to our Breaking Bitcoin market update video playlist is on there. Everything you guys could possibly want. Lucas Halajian. I'm going to stop saying last names. I swear to God, man. I'm sorry if I mispronounced it. Thanks for the sub on YouTube, man. You can find all the links to all our content, educational material, and resources on the website, krakencryptocurrency.com. If you guys would like to support the show, again, there's a lot of ways that you can do it. If you're on YouTube, you could give that like button a gentle nudge, give us a sub, and hit that notification bell. Again, we are here every single morning at 11 a.m. Central Standard Time, noon on the Eastern Seaboard, to give you guys our market updates, thoughts, opinions, comments, concerns, sarcastic remarks, and no death threats, not from us. No, we were more sure than that. If you guys would like to help in a more substantial way, you guys can go check us out at Twitch, twitch.tv/KrakenCrypto. Give us a follow, costs you nothing. If you have Amazon Prime, you guys can give us a sub for free. It costs you nothing. We get a couple bucks, help keeps the lights on. We appreciate it, man. If you'd like to get something of value, then you can head on over to our merch store. Again, I've talked about this ad nauseum. If you do drink your morning coffee out of the Kraken Crypto, it's a specific one that you have to drink it out of. It's this one right here. It's the HODL mug with our logo as the O. If you do drink your morning coffee out of this, your coffee will taste 95% better, and you will be 87.96% more attractive to the opposite sex or the same sex, whatever. You know, no judgments here, judgment-free zone. So we get a slight kickback from the sale of the merch, guys. Helps keep the lights on. We appreciate it. If you would like to join the premium, the Kraken Cryptocurrency Premium Trading Group, you will get access to the private VIP chat. where we discuss trade setups and trading strategy. You will get access to our Signal channel. You will get access to all our trade setups, all of our charting. You will get access to the resource library that has gigabytes of educational material. You will also get access to a tracking sheet and our live tracking sheet, as well as the welcome packet and educational material. You will also get access to the private one-on-one webinars with me and the rest of the team members every Friday at 8 p.m. Central Standard Time to discuss trade strategy, risk management, and new ways to trade and set up your calls. You guys can go find some anonymous garbage Discord or Telegram group if you want. Or, that are anonymous, you don't know their name. Currently for the month of December, it is $80 a month if you guys would like to join the premium trading group as well. We'd love to see you in there. We've been growing quite rapidly over the last few months, and I'm just excited to see all the new, promising, aspiring young chartists and traders in there as well, guys. So looking forward to hearing from you. If you guys have any questions, comments, thoughts, sarcastic remarks, and or death threats, as always, leave them in the comments section down below, or you can reach us at contact@crackingcryptocurrency.com, or you could DM me or any other admin in the Discord or a moderator if you so desire. You can also fill out this form on the website. Comes right to us, guys. So I want to thank you again for joining me today. We will close today with gandering at XBTUSD, guys. As always, trade safely. I'll be here in the morning. You guys have been fantastic. And as always, trade safe.